Hello and welcome to this video where we will explore some of the highlights of BNamericas 2024 Electric Power Industry Survey. I'm Laura Superno, Managing Editor of Research at BNamericas. Despite the various problems it faces around the region, the overall outlook for the electric power sector in Latin America is optimistic, according to industry players surveyed by BNamericas. Opinions are positive in critical areas such as investment plans, willingness to develop new projects, and expectations regarding access to financing. The planet's energy transition, focused on the electrification of transport and industry using clean generation sources, is particularly favorable in Latin America due to the availability and quality of resources such as solar radiation and zones with strong wind, which provide for competitive generation costs. In this sense, there is significant expectation around continued strong investment in renewables in the main markets, as well as faster growth in countries where investment in greening the energy matrix has been limited so far. More than 70% of respondents to the 2024 survey have a positive or very positive outlook for the electric power business for the next 12 months in general terms. Consistent with this mostly optimistic view, 2/3 of respondents said their companies have plans to increase investments in 2024. This marks a third consecutive year of growth in the percentage of respondents who indicate plans to increase or significantly increase their investments in the survey year. After a poor 33% recorded in 2021, which was a year of high uncertainty because of the pandemic, the percentage rose to 59% in 2022, 60% in 2023, and again growing in 2024 to reach 67%. The 2024 survey shows an increase in the percentage of respondents who believe the design and approval of new projects will accelerate in the next 12 months. Half of respondents now see new project activity accelerating. The result appears to indicate a somewhat more solid level of optimism after a few years of post-pandemic wavering. Solar energy is once again seen as the generation technology that will grow the most in the region. 69% of respondents see solar growing the fastest, consistent with the reality of recent years in both Latin America and globally. In terms of emerging business segments within the electric power sector, almost half of the survey respondents believe that battery storage offers the best investment opportunities for the next 5 years. Amid the overall positive outlook, opinions regarding financing conditions were a little bit more tepid, or at least flatter compared to last year's survey. 46% of respondents say that financing conditions for electric sector projects in the coming months will be better, as this graph shows. However, when we isolate responses from people who work at generator companies, the view is somewhat more pessimistic, with 40% indicating that conditions will be better, 40% indicating similar conditions, and a larger 20% expecting worse conditions in the year ahead. It is possible, after a couple of years of high interest rates, that the decision at the end of September by the United States Federal Reserve to cut interest rates by 0.5 percentage point could help to boost the outlook. However, in the largest and most active electricity market in the Latin American region, Brazil, the central bank decided to go in the opposite direction and raise the reference rate in September. So it does remain to be seen what further rate actions might occur and how these might impact access to financing. Even so, and consistent with plans to increase spending and with the positive outlook on new project activity, when we look only at responses from generator companies, we see a larger percentage of respondents this year compared to last year saying that their entity plans to raise capital. 48% of generator respondents say their company plans to raise funds in the year ahead, 15 points higher than a year ago. Apart from challenges in financing, there are other hurdles that players must jump in the electric power sector in Latin America, and one of those is regulatory issues. The electric sector is by nature highly regulated, and due to its technological evolution in recent years, which has been profoundly modifying the business models in the industry, it requires increasingly frequent regulatory changes. This evolution and adaptation of the regulatory framework is one of the main concerns of the actors in the sector in Latin America. Almost two-thirds of those surveyed this year indicated that their organization will be impacted in the next 12 months by regulatory changes. This represents an increase compared to the results of the 2023 survey, when 56% expected that regulations would impact their operations. For generators, the perception that their organizations will be affected by regulatory issues is even higher. 78% of respondents from generator companies believe that this will be the case, while only 10% say that they do not expect to be impacted by regulatory issues. This outlook could also play a part in the cautious outlook on financing conditions. Many respondents to the survey commented that local regulatory conditions have a significant impact on financing conditions in any given country. As mentioned in the context of other questions in this survey, country, political, and legal risk remains the biggest threat to the electric sector in Latin America, according to more than half of respondents, a slightly higher proportion than in last year's survey. However, these percentages are significantly lower than 2 years ago, when responses exceeded 70% in among both the entire pool of respondents and only generator companies. Conversely, there is an increase in the number of people who see regulatory barriers are the biggest threat to the sector, in line with the previous question, in which a higher percentage of respondents see regulatory issues affecting their companies. Regarding the country that has the best investment climate for the short and medium term, Chile remains in the lead with almost 32% of the responses, although with less acceptance than last year, when the country registered 37% of responses. Despite recent tariff problems and significant delays faced by many projects due to the increasing complexity of environmental and social permitting processes, Chile continues to remain a country with a clear reputation as a market with stable rules and legal certainty. Brazil, which ranks second in the survey as having the best investment climate, continues to show that its main strengths are in the size of its market and its large potential for renewables. The Latin American electricity sector continues to be seen as promising by industry players, even though there are still many aspects to improve around regulatory and political risks in some markets and macroeconomic risks in others. The advance of renewables and market demand for more clean energy make for an attractive market with large potential. There is also a powerful emergence of new market segments, such as storage and, for the longer term, clean hydrogen. Thank you very much for watching. I'd like to remind BNamericas subscribers that the full Electric Power 2024 survey report is available on our platform with extended results and analysis. For those who are not yet subscribers, I invite you to visit bnamericas.com to see how our offering of news, reports, project profiles, and data can support your business in Latin America.